Hello?
Hello, can you hear us? Can you hear me?
Yes, I can hear you. I can hear you. Can you guys hear me?
Yeah.
Okay.
Chief, you said you wanted to teach us something during this weekend. I've forgotten the stuff. How to take one entry, be aggressive entry, somehow, something like that. I don't
Yeah,
remember again.
about aggressive entries. That's true. I was making a reference. Where's Chima? Chima was the one who brought that up. He's not here.
I'm here.
Okay, so it was aggressive entry and what again? How to do top-down analysis, right?
Yes.
It's on Euro GBP.
Euro GBP. Okay, so we already did the top-down analysis. And I believe you guys have the understanding already, right? So we just go over. I think that particular day we were having this conversation about the rejection. I was telling you guys about the rejection, how I trade news, right? How I trade when it comes to news period, and when I trade when it's something like this.
So, but for the aggressive entry, we I think the least hour will be like an hour or 45 minutes if it's not in your POI.
If it's not in your POI,
like to get the confirmed rate, like is it 1 hour we use or
I use 1 hour. 1 hour to confirm a rate or a stop. 1 hour and the 4 hour time frame is better. You know, if the 4 hour candle closes below your POI, you know, after mitigating your POI with the stop on, or you know, stopping your POI out and then closes below or within your POI, I use the 1 hour or the 4 hour time frame. I don't use a 15-minute time frame, you know, because the 15-minute time frame candle, this can be a candlestick, and then price rates this and then closes below this, which gets in this guy, and then on the 15-minute time frame it goes back up. This entire price action could be like a single price action on, you know, the 1 hour time frame, right? And then on the 4 hour time frame, you might just see something like a single candle, or let's say a ranging candle. Sorry, but you could see something like a ranging candle, and then a single candle comes out with the wick. The wick price intends to go back up, and that could be this guy, because it clears out the low and then goes back up. But now instead, you're actually calling this high a rate because it cleared out these guys, and then you're not paying attention to this one as well. So the 1 hour is the lowest to go. Don't go and look for stop hunts and wait on the 5-minute time frame, because price does that to your POI. Sometimes it does work, but I don't advise that because it's too, you know, low and very, very manipulative. Okay, so who does a stop? They can easily do a stop hunt of 30 pips on the 5-minute time frame, and it could actually look like this. You see, they could do something like this on the 30-minute time frame, on the 1-minute time frame, on the 5-minute time frame. But on the 4 hour time frame, it will take a lot of money to do something like this, and there's no way you call this a manipulation, because this is price moving in the direction of the trend on the 4 hour time frame. This could be over 200 to 300 pips, right? So this is not really a manipulation, but price moving in its direction. Okay. So for rates and stop on, those are higher time frame confirmations. Those are 1 hour and the rest. And the best to trade them is maybe if you see price closing below your POI, if it's on the 4 hour time frame, you could enter on that particular rejection based on how strong you confirm your POI, and have your stop loss being placed aggressively above your POI. Okay, let's say if it was the 4 hour time frame, what I do is that I don't really, let's say we have this guy, you know, so let's say we had this confirmation, you know, price mitigated this, filled the fair value gap, and it's going back up. If I wanted to trade this aggressively, I would have entered on the next candle formation, obviously not this, and have my stop loss placed around here. But that's based on my risk. I know how much I'm risking, you know, and I know how much I'm on the confirmation I'm having on this, and this is how I do my aggressive. So my aggressive still wait for candle reactions, right? So it's not really like the aggressive other people do and just assume a demand zone is going to hold and try to place their orders like this. Maybe me trying to sell like this. Say I was trying to do aggressive entry. No, not really. I would actually wait for price to close above this candle. As you can see, this was mitigated at the opening here. Obvious order block again, right? So I would have my POI placed like this. You know, But if this is a POI and then you're calling this guy, the rejection, it didn't really actually close above this, but was below this. You see, it did not close did not close above the inducement, was below the inducement, and still within the POI. If this guy had closed around this zone, then yeah, I would have thought about doing that on the next candle formation. Okay, like example, you have this right here. This was the POI. Find from the wick, from the body, the wick below. This was the POI. This was the inducement. Price actually did close above both them. So if I do something like this, I have price like this, like this. This is aggressive trading, but still based on confirmation. Okay, so you see the difference between this guy and this, right? You can identify the difference now, right?
Yes.
Okay, so let's go back to analyzing EURGBP. Right now, looking at this structure, we know price has cleared the internal highs within this range, right? So once the liquidity, and that will happen because price actually just cleared that the liquidity was still below these lows. But looking at this structure, this is just price breaking structure, right? Clearing at external lows and then heading into the internal structure of this range to clear the internal highs. So now what happens when price has cleared the internal highs? What's the next target? Price goes for what?
External lows.
The lows, the external lows.
Exactly, external lows. So now we know that this guy, this could be a target for a swing one, right? Because this is the external low. And then we can see that obviously maybe this could be the structure which is being formed right now, right? So on the monthly time frame, we're bearish. All right, so now let's go to the weekly time frame and see what we have. So now we have a stop hunt, and price accurately closed below the POI. You see, that's why I'm calling this a stop hunt. See what I'm trying to say, right? Accurately, price closes below this POI, filling this fair value gap. So on the line chart, boom, this never happened. You see what I'm trying to say, right? So you see what the difference between manipulation.
Yeah.
You see? Actually never happened. So this is how you spot a manipulation and also how you spot a break of structure. So
wait, I have a question. So anytime that happens like that, that's pretty much manipulation, right?
Yep.
Because when you can't see it on the, because I was cold, I've never seen nobody really break it down like that. When you take it from the with the candles and then you don't see the wick anymore, that's just nothing but manipulation.
Exactly.
Okay.
So you see, same thing happened here. This was a POI, which was supposed to move price back down, but an obvious order block. So when we see an obvious order block, what do we expect? A stop hunt, because a lot of liquidity is being resting above these highs, right? And you see something like this happening on the wick, boom, never really happened. You see clean price action, flood liquidity, break structure, inducement, mitigation, down. You see, no manipulation, nothing. But when you do this, you see, stop hunt. So this is how you know a stop hunt, and then you know a wave price action which is happening. So we can say some bearish price. We can say for the long run, EURUSD could be going, EURGBP could be going bearish, right? So now let's look within this. It's going to be a little bit difficult trying to analyze a price action which doesn't really have a candlestick which doesn't really have a price action because it's a manipulation, right? But what we do know is that this becomes the current high. But before price returns into this, we want to see price clearing at this low because we want to see a break of structure, right? So we have this lows as our first target, and within this structure, so we want to look for a trade. We also have these highs resting within this range, right? And then we have these fair value gaps resting right here. Okay, so we have old highs resting above this, and then we could see something like this. The price coming back down. You see? So in the daily, what do we have? We have we can see a bearish price action coming from this point. Hasn't really cleared out the external low yet, just reacting within this range. So we still expect price to react within this range, okay? But then this high is kind of like a weekly target on the weekly time frame. So a stop point, and you see is another set of block as well. So a stop point above this high would be like a surprise to us, right? Because we see it's an obvious high, and on the weekly time frame is also, liquidity zone. And then on this guy, we have this fair value gap on the weekly, or we could say from this point, because I didn't really close below this, so this is still valid. And we also have a hidden base at the 50% of this fair value gap, right? So this comes to POI as well, which we can expect price to react for. Okay, so that's like a POI. So let's go down to the forward time frame, see if there's anything readable. This point, internal highs. This is like an internal high, and then we have this imbalance resting right here. Okay, so for now we have this price action. Let's keep our eyes on this price actions, and then try to trade from this one. So first of all, this high had a stop point last week. We had a stop point of this high, which price did close below our POI. We have the inducement, and then on the daily time frame, this is like an obvious to the block, which right here would be a POI. Would pay attention to, because it's like the closest POI to the inducement, and we're just expecting a little stop point of price, and price actually did mitigate this guy. So this was my setup last week. In the other chart, I had this POI resting right here, but I also had this highlighted as well because I was still expecting a stop point, because on the weekly time frame, you see, because on the weekly time frame, this was like a liquidity target, right? But on the lower time frame, we still have an inducement right here. So there's every possibility that price could react from this. But at the same time, I knew that we could still see a stop point into this guy, and which we did have a stop point, but price closed within the zone. So it's then still a confirmation for you to know that there's every probability that price could be going down from this point. All right, so that being said, let's go down to the lower time frame to see if we have any confirmation, any setup at all. So we have this candle, which caused the manipulation, right? So on the 5-minute time frame, let's see if we have an inducement resting below that. Would we find down to this? I don't think I have to explain anything from here now, because I believe you all understand what I'm doing, right?
Yeah.
All right, so we have 10 minutes for this particular Zoom. So I'll leave you guys to ask questions for those 10 minutes while, we try to answer them. And also, I would like to let you guys know that from next week, which is this weekend, from this weekend coming, we will start our mentorship on Wake Up, all right? Sorry, the upper week, because I'm traveling back to this weekend. Traveling back to school this weekend. So once I'm back, I'll have enough time to myself, because, staying in my own apartment. So, won't have much of this family noise and stuff like that. And then we would have to, learn Wake Up, try to see how we could use Wake Up on SMC and see how we could be profitable using that. But now on this point, let's see. We could still watch this zone. Look for a buyback up. It's a new week. We could see something like this. And price goes back up. If we do have our Asian high forming right here though, because we know obviously this is an inducement, right? Obviously the block fills the imbalance halfway, have a fair value gap. So clearly that's an inducement. So what we have is fair value gap. IPA candle, indicated an FA candle. This guy is the inducement, and coming from a higher time frame POI. So this is like a 5-minute setup for the week. So you see, I came down from the monthly time frame, right, and helped me to understand what I want to do down to the 5-minute time frame. Now, if I see a mitigation of this, and I see something like this, and it breaks structure, and I trade from here, I could expect price to do something like this, you know. But at the same time, if this doesn't break structure, I could hold this down to the 4-hour target, which we can see overall stop point of that high. But we, at all, we're expecting price to react from this point, you know, because this is our first reaction. We have the first reaction from here, and I want to see price react perfectly from this spot. So let's say within Monday, Tuesday, we could say a setup, but that's based on the price action, all right? So that's not for us to decide. We also have to wait for the price action. Okay, so let me copy this as well. Oh, wait, hold on. I'm not sent down to.
Hi, hello.
Yeah, we can hear you.
Yeah, so was it not long ago you marked like a hidden base, and I was just wondering how do you like mark them? Because can you go to like the daily time frame of this chart?
Okay.
Yeah. The Euro GBP.
Right.
Can you zoom out a bit?
Let me hide all this.
All right.
Yeah.
Yeah. So when you look to the left, you did mark some
Yes.
hidden order block. Yeah. How do you like mark it? Well,
No, so when it comes
do you
to
mark like have you seen one of them? Was one of the bullish candles has got like a wick
This?
below? Yeah. Do you take
this?
Yeah.
Okay, so how did I mark the hidden base? How do I mark this hidden base, right? Or why do I call this a hidden base?
Yeah.
So
Yeah.
okay, so most of the time, right, when you see something like this, within this structure, what do you have? You know, when it comes to picking a POI, what do we call a POI? We want to see something like this, right? We'll have this as an inducement, and this as, you know, the main demand or supply zone, which we want to pay attention to. Having this in a single candle, let's say this price action was in a single candle, what would we have? We would have a candle like this, you know, and the next one probably like this, you know, with a wick over here. So within this price action, what you have to understand is that if we do have a price action on the lower time frame of this, then, you know, something like this, we're likely to have. So I think my network is being interrupted again. Sorry. Okay. So we're likely to have this as a fair value gap, and this as our demand zone. So on the candlestick, using the candlestick, you have to understand that this would now be looking like something like this on the lower time frame. All right, but now it's high probable when it's looking like this, because this is not something which is too obvious, right? So it doesn't look too obvious on the higher time frame, and everyone doesn't get to see this. Now, when it looks like this on the higher time frame, when you see something like this, although it do look like a POI, right? It looks like a POI, but it's high probable and stands, you know, to hold stronger when it looks more like this. You know why? Because people don't really get to identify these stuffs easily as the same way they do identify these guys. Okay, you can't really spot this. You can really easily spot this, you know, than spotting this. So 90% of the time, price reacts from the wick, right? And having, you know, and this has a high volatility than, you know, compared to when you have an obvious POI. Okay, but what we will do is this. I'm going to find a way to break this more, mainly for hidden base, right? So the Wyckoff section will be starting on, you know, not this weekend, but the next one, right? So what we do is that this coming weekend, our study is going to be based on hidden base. Okay, hidden base and IPA candles. You know, when you're marking hidden base and how you mark your hidden base. Most of the time, what I do is that I do refer guys to videos, but this time around, I'm going to be teaching you guys how to mark hidden base. All right, so I would try to study them and get them more refined and understand, and how to explain them in a way you would have a better understanding of it. Right? Because right now I don't really know how to break this down, to a very, very easy way, like I normally do with my teaching, so you guys to get a better understanding of it. But what I will do is that I will go to studying it again and finding a better explanation for it to help you understand it more. All right. So let's say next weekend, we have just 2 minutes on this Zoom. Next weekend, we will take out the full section to explain how to pick a hidden base and how to pick an IPA candle. Okay.
All right, no problem. Thanks.
No problem. So any other question within the 1 minute that we would have to attend to?